Okay.
The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everybody. Today, of course, is July 13th, 2017, and our regularly scheduled webinar. So today I want to go over a few things that we normally cover, and then show a couple of charts towards the end, a couple of interesting chart setups. But before I begin, I do want to welcome everybody to the webinar today. So again, thanks so much for being here. All right, we're going to start out with the monthly charts. And by the way, I'm going to kind of move through this really quickly today because you all obviously get access to the PowerPoint and the levels and so on and so forth. And that's really what's critical here. Okay, first off, here's the monthly chart of the S&P 500. As you can see now, the upper band is 2384. As of yesterday, we were trading at 2443. So we're now about almost 60 points above the upper band. And then here's the Dow, 22,156. Is that right? I'm sorry. Upper band is actually, that's the smaller band. The upper band is actually 20,685. As compared to the price right now of 21,560. So it's about almost 1,000 above the upper band. And then here's the NASDAQ Composite, 58.99. Yesterday we closed at 63.42. So again, well above the upper band. And then here's oil. Now, I wanted to show this again because this is kind of an interesting setup. You know, we know that oil had breached, actually was well above the upper band way back in 09, came back for the retest, sold off, broke through the mid-band, bottomed, and then retested the mid-band. And that just happened a few months back. And, you know, we've had a few months where it butted up against the mid-band. And, of course, now it's pulling back. So now the million-dollar question now is, does it hold here? And when I say does it hold, can the XLE hold above the low of last month's bar, which is 42? If it does, then we might be getting into a situation where we'll probably retest the mid-band again. And then here's copper, okay? Copper, let me take a look here. Copper has been kind of interesting because, again, it violated the upper band back in 2010. Came back, basically held support right at the mid-band, and now it's starting to move up. Now, what's kind of interesting about this chart is it's kind of gone into a kind of a handle pattern. Let me just show you what I mean. You can see we've had this really tight range of trading. So what's going to happen here is this. If this breaks out, I think this could be a very strong move. So this is well worth watching because, you know, it'll create some opportunities in some of the copper stocks, namely Freeport is one of them, Freeport-McMoRan. Okay, I'm going to back up before we look at some of the shorter-term charts and just discuss this. This is something I wrote from this week's update. And I had said, you know, and I'll paraphrase it. Basically, I wrote that at this point there was a question, would the market sell off? This was basically based upon last Friday. Would the market sell off and close under 2421.88? And quite frankly, this was a very curious question to consider at the time. In fact, one of your members actually emailed me to ask me the exact same question. And this question was simply this. What are the chances of the end of the day pullback last hour, perhaps to the 2421.88 line? And this is how I responded to him. I said, I don't see it because the VIX is still heading down. Always watch the VIX for the clues. Also, the S&P 500 stopped yesterday right above that minor 2406 line, okay? So here are the charts at the time I received that email. Okay, and I thought this was interesting because, this was kind of a dynamic question to deal with at the time. But you can see here that the VIX was essentially, it gapped up, was essentially trading down all day. And the S&P, okay, had gapped up. Here's the follow-through the next day. Here's your fake out. It bounced off the mid-band. Then it finally punched through the mid-band. And then the question, obviously, at that point was, okay, what are the odds? Wait a second. Let's take a look. At that point, the S&P was trading at 2430.45. So it was about, 9 points above the 2421 level, maybe 8 points above that level. And then here's what happened, okay? Basically, the rest of the day, it kind of remained flat, okay? And, closed, it started to sell off at the close, but it never closed below the 2421 level. 2421 would have been down here. Now, what's interesting about it is the next day, it did test that line again. But again, the reason I brought this up was because, following the VIX is kind of the clue or the mechanism that should give us an indication as to what the market should do. Okay, here we go. Here's the current view, short-term view, 60-minute chart of the S&P 500, okay? Now, the key levels at the moment are this. We know the 2421.88 level is the downside confirming line. And what's been interesting about this is that we've had days that have closed under it. However, we have not had consecutive closes underneath it. Okay, so, even though we kind of get below it, you notice the market quickly recuperates that level. For example, here's a day, well, certainly this day closed below it, but the next day it recouped. Okay, then the 30th, it closed, the 29th, it closed below it. Actually, I don't think it did that day because it recouped it. It bounced up, stalled at 2337 line, and then dropped again. Now, remember, we have a minor level at 2406. And what's kind of interesting about it is it stalled here once, stalled here again twice, and then that's where the market's been moving up from. Okay, and now the next level up is this 2453 level. So if the market can close above 2453.12 for 2 days, I do expect, let me go back, 2500 becomes the active target. And that's the level that I'm looking at as a possible major reversal level. But anyway, here's the 30-minute chart. Now, this is a chart setup that I wanted to show because, again, in terms of reading these extreme bands, the price patterns become somewhat predictable, okay? And I say that because, let me point it out here. Over here, we got underneath the lower band back on the 29th, right? Which essentially tells us that we should expect a retest of the lower band again. Now, what's kind of interesting about this chart is it reversed, and this was kind of, we kind of had a July 4th rally, and where did the rally stall? Essentially at the mid-band. And then it slightly breached it, came down, came up, and there's your mid-band sell. So quite honestly, had you shorted there at the mid-band, the objective was back to the lower band. Now, it hit it here, just moved up slightly, and then breached it again. So now we have a scenario where the lower band was breached again, which tells us that we should expect another retest. And over here, we had the retest. And it just basically spiked down, okay, and quickly reversed. And that's what started this most recent rally and this recent run-up. Okay, then here's your 10-minute chart. Okay, now, I'm sorry, let me go back. Here's your 10-minute chart. Now, on the 10-minute chart, you can see that just yesterday, that crossed into an uptrend. Okay, so again, support should come in at the EMAs underneath it, and certainly at the mid-band. All right, now we go to the VIX. Here's the 60-minute chart of the VIX. And again, just like the S&P breaking under the lower band, the VIX had punched through the upper band, which was up here. Punched through the upper band, which tells us to expect a retest. Okay, and then lo and behold, we had the retest, stalled right under the 1328 line, and then it's been moving down ever since. Now, 1172 is the downside confirming line, right? So the downside confirming line, all right, tells us that at this point we've had multiple closes under it. So I expect a retest of 938, and that's where the VIX is somewhat grinding to. And then here's the 30-minute viewpoint. Now, I wanted to show that because you can see here the 200 EMA is very close to the 253. Matter of fact, they're within 9 cents of each other. So I do think if the 30 crosses into a downtrend, we probably do have a little more room on the downside. Okay, and then here's the QQQ. 135.94 is the downside confirming line. And, you know, we've basically had 3 kind of tests of that level. And, you know, then, of course, you know, since the 6th, the Qs have rallied up, and now we're back above the 139.06 line. So a close above that today would mean that the objective should be to 143.50. And then here's the GDX. Okay, GDX on the 60 had moved into a downtrend towards the end of last month. Okay, we know that 2188 is the resistance line, and that's where it hit yesterday and started to sell off from. And then on the downside, we have 2109. So that's a key level because if the GDX does close underneath that for 2 days, I expect to move down to somewhere around 1718. And then here's the shorter term view. So here's your 60-minute view, 30-minute view. And what's interesting about the 30 here is that you can see that's in a clear defined downtrend. And then there's the 2188 line that the GDX tested yesterday. And what's kind of interesting about this, by the way, is if you look at this, it stopped at the lower band. Well, guess what? It ran right back up to the mid-band. So there's your, you know, extreme Bollinger Band pattern. Now here's the TLT, okay? TLT, you can see it is in a downtrend, okay? The 121.88 level is a key level for the TLT, okay? And it did hold above it on this last pullback. But that level is key because if the TLT does close under that for 2 days, it could drop to 112, 115 possibly. Now on the upside, I do expect a retest to 125, and I expect 125 to fail. That should be strong resistance. We scale down to the 60-minute chart, and you can see that the 60 had just crossed into a downtrend a few days ago. Okay, and you know what's interesting about this chart is that the mid-band is 124.67, and we know we have a resistance line of 125. And then here's the XLE. Now again, here's the daily chart. Okay. in a downtrend, crossed into a downtrend in the beginning of May. All right, you can see the EMAs are starting to spread. We are getting a little counter trend bounce here. I don't know if it takes out 69 on this bounce. I don't even know if it gets that high. But this is what will tell us, okay? We've got the confirming line at 63.28. At this point, I do believe 65.63 should be retested. The 60-minute is in a downtrend. The 200 EMA is 65.11 versus 65.28 for the midband. Now, for the XLE to most likely make any more significant headway, I would expect the 60 to move into an uptrend. And if we scale down to a 30-minute chart, okay, you can see that the 200 and the 253 are very close. They're within 4 cents of each other. So again, the 30 should cross above, cross into an uptrend before the 60. So we'll see if that happens, okay? All right. And here's a sell-off. These are some charts I wanted to show. And again, I'm running through this material very quickly today. But it's interesting because the auto retailers, when I say the auto retailers, the aftermarket retailers, have been getting slaughtered, okay? AutoZone is one of them. Okay, and I wanted to start with a monthly chart of AutoZone because you can see here what happened. I mean, AutoZone bottomed in 08 at roughly 85 a share. It ran up to a high of almost 820 a share the middle of last year. And again, what's really instrumental about this is simply this. Basically, the extreme band doesn't begin till here, but if you draw this, probably draw this down, that's probably what it looks like. It took out the upper band, held support on it here, and just continued to trade above it, showing just insane strength. Then finally, okay, it closed back underneath the upper band. And since that time, it's been selling off hard, okay? You know, when you look at this, this chart, and again, this is a mid-month chart, okay? I pulled this off yesterday, so it's only half a month. But if you look at it, it's down $77 this month, or 13%. Now, I guess a couple of issues come into play here. First off, I guess issue one is, had you been long AutoZone, okay, the minute it started to close back underneath the upper band, would have been a pretty good idea to, would have been a very good idea to book profits, okay, especially after a 1,000% gain, right? You know, would you consider going short at that point? Perhaps, okay, perhaps not. I mean, you know, depends on your risk tolerance. But as you can see here, once it closed back underneath the upper band, which really, you had a little bar here. I don't know if this bar did, but certainly this bar did, okay? And that was probably about $750. I mean, basically it's dropped like 200 some odd dollars in a couple of months. Now, if we look at this on a weekly chart, this is the weekly chart, okay? So you can see what happened here. We kind of had, kind of interesting. On the weekly, here it butted up against the upper band, had the retest to the upper band, okay, new high, okay, then a lower high. And on the lower high, that's when it started to really slurp and just completely cratered. And what's interesting about this high as compared to the other ones, okay, if you look here, money flow was still positive. Here it was slightly negative. At this high, it was still positive. But look at this high. At that high, the money flow was negative, leading up into that top. So from that point, that pivot pi was roughly 114, and it's dropped from, I'm sorry, 814. It dropped from 814 to a price of 503 yesterday. So it's dropped almost $300 in, basically a half a year, and pretty much straight down, by the way. And here's another company in the same industry group. Okay, this was O'Reilly Automotive. And this, I think, made it even a bigger percent gain. I mean, look at it. It bottomed at $20 a share back at the end of '08. Peaked out at almost $300 a share. So that's almost 15 times your money. All right? And then again, what we can see here is, and again, we don't have enough data to plot the upper band the whole way, but if you draw this down, most likely this entire run was well above the upper band, okay? And then finally, it closed back inside the upper band. And then we go back to the weekly chart, and here's the weekly. So this is kind of interesting because, once again, notice how O'Reilly had the same pattern similar to AutoZone in that when it rallied up to that high, the money flow was negative. And from that point, it was roughly $286. It dropped down to a close yesterday of $182. So it dropped about $104, since that top. Just incredible. I mean, remarkable drop. But the reason I wanted to show those is because that's the kind of action that can happen with these extreme bands, okay, especially on a long-term view like a monthly chart like this. All right, so let me close that down for now. Let me close that down because there was one chart I did want to show intraday based on an earnings. It was the one that reported yesterday, MSM. All right, here's MSM. Let's take a look on the daily. There's the daily, okay. It got crushed yesterday off earnings. It was down 14%. Okay, and, money flow had flipped slightly positive yesterday. Here's the 60-minute chart. Now, this is kind of interesting because if we scale down to the 60 and then the 30, what's really kind of interesting about this is that both those time frames had negative money flow going into earnings, all right? And, of course, the stock cratered. So it gave us somewhat of an indication on a directional bias, all right? And then if you look at this 10-minute chart, again, if we use this first bar concept, all right, the next bar closed underneath it, roughly 77, dropped another $6 yesterday intraday, and just continued to drop. Then it bounced. Okay, eventually it's going to bounce. We know that. It bounced, finally closed back inside the lower band on the 10 late in the day. But if you go look at the 30, it's still well below the lower band. So, I would expect this to consolidate for a while before it wants to make a little dead cat bounce. But I thought this was a particularly interesting and earnings deal because, quite honestly, it's not a stock that I'd really look to for a big move on earnings. But yet, here we go. We have a huge move of almost 15% off their earnings. And, as I said, I wouldn't normally think of this type of a company as having that type of a radical move. But, again, it goes to show you how these companies can react. Now, remember, tomorrow I think we have a couple of the bank stocks reporting. We got a couple of the bank stocks reporting tomorrow, a couple of the major banks. And they've been really very strong lately. So it'll be interesting to see how they fare off their earnings tomorrow. Okay, let me just take a quick look. See if there's any questions. Okay, no, I don't see any questions. So I'm probably going to close down for the day because I've got a couple of issues going on up here in my life. Unfortunately, my mother-in-law's health is not doing well at all. So I'm going to, if you don't mind, I'm going to close out for today, and we'll reconvene again in 2 weeks. But again, I do want to thank everybody for being here today. Have a great rest of the week. Thank you.